Here's something most people don't know. If you owe the IRS, a big chunk of what you owe might not even be tax. It's actually penalties. And on top of those penalties, the IRS adds interest. So your bill keeps growing month after month, even if you haven't even touched it. But here's the part they don't tell you. In a lot of cases, those penalties can be reduced. Sometimes they can even be wiped out completely. So today I want to show you exactly how that works, who qualifies, and how to ask for it. Welcome back to the Alleviate Tax YouTube channel, where our team of CPAs, IRS enrolled agents, and licensed tax attorneys help everyday people deal with the IRS. This channel is where we break down real tax problems in plain English, whether you're a W-2 employee, a small business owner, or an independent contractor. There are no scare tactics, no filler, just honest information you can actually use. So, if any of this sounds useful, please hit subscribe. Let's get into it. First, let's talk about how these penalties add up, because once you see it, you'll understand why acting fast matters so much. There are two main penalties the IRS hits you with. The first is the failure to file penalty. This one is for not turning in your tax return on time. It's 5% of the tax you owe for each month your return is late. That keeps growing until it hits the cap of 25%. And if your return is more than 60 days late, the IRS puts a floor under the penalty. For returns due in 2026, that floor is $525. The second one is the failure to pay penalty. This is for not paying your tax bill on time. It's much smaller, it's 0.5% of what you owe each month, and it caps out to 25%. But watch this. If the IRS sends you a final notice saying they plan to levy or seize your property, that 0.5% jumps to 1% starting 10 days after that notice. And if you already have a payment plan in place and you miss a payment, they charge 0.25% each month. On top of all of that, the IRS charges interest. This rate is set by the government and it changes every few months. Right now, it's sitting at about 7% a year. But here's the part that really hurts. That interest builds up every single day and it never stops until the balance is fully paid off. So between penalties and interest, a tax bill can balloon really fast. The good news? You have options to bring it back down. So let's start with the easiest one to qualify for. It's called the First-Time Penalty Abatement. Think of this as a clean slate break from the IRS. If you've been a good taxpayer, they'll often forgive your penalties the first time you slip up. It covers both failure to file and failure to pay penalties. And here's a bonus. It can even wipe out the interest that piled up on those penalties. One catch though, it won't touch the interest on the tax return you actually owe, only the interest from the penalties themselves. So who qualifies? Well, generally, you need a clean recent record. That means you filed all your required tax returns, and for the 3 years before the penalty, you didn't have penalties like this one. This isn't a once-in-a-lifetime deal. You can generally use it about once every 3 years, as long as your recent record stays clean. So it's worth saving for when you really need it. Here's another helpful tip. You can often ask for a first-time abatement even before your full balance is paid off, as long as you're paid up or set up on a payment plan. But keep this in mind, the failure to pay penalty keeps growing until the tax is actually paid. So once you're paid in full, you can go back and ask for relief on that last piece as well. Applying is really simple. You can call the IRS at the number at the top right corner of your notice, or you can send a written request or fill out Form 843. That's the official IRS form for asking them to remove a penalty. What if you don't qualify for first-time abatement? Well, there's another path. It's called reasonable cause. This one is for when life got in the way. The IRS will forgive penalties if something serious stopped you from filing or paying on time. That includes things like a natural disaster, a fire, a death in the family, a serious illness, or another emergency you couldn't control. It also counts if the IRS system went down while you're trying to file or pay online, or if you couldn't get your own tax record when you needed them. But you have to know what doesn't count. You usually can't blame your tax preparer for filing late because the IRS says it's your job to make sure it gets done. You can't say you didn't know the rules. You can't blame a simple math error, and you can't say you just didn't have the money. Here's the important part with reasonable cause. You need proof. If somebody passed away, bring the death certificate. If you were sick, bring medical records. If there was a disaster or a fire, bring documentation. The more proof you give, the better your chances are. And one nice thing to know, if you ask for a reasonable cause, but the IRS sees you actually qualify for first-time abatement instead, they'll often just use that program to remove your penalties. So you're covered either way. Every so often, the IRS rolls out a special one-time waiver. For example, a couple years back, they forgave certain penalties for millions of taxpayers who owed money for older taxes. Those programs come and go, and they usually have their own rules and deadlines. So if you have older tax debt, it's worth asking whether any special relief applies to you right now. A tax professional can check that for you within a few minutes. Now, here's the part I really want you to hear. Sometimes these penalties are a warning sign of a much bigger problem. If your tax debt has grown so large that you can't realistically pay it, penalty relief alone won't fix these things. That's usually a signal that you need a full plan, and the IRS actually has programs for people in that spot. One of those plans is called an offer in compromise, where you may be able to settle your tax debt for less than what you owe. There's also a partial pay installment agreement where you pay a smaller monthly amount over time. And there's currently not collectible status, where the IRS agrees to pause collection because paying would cause real hardship. Here's how to tell the difference. If you're dealing with one late return and a small balance, you can probably handle the penalty request yourself. But if you owe thousands of dollars, or you're getting notices, or you're worried about a levy on your paycheck or your bank account, that's not a do-it-yourself moment. That's when it pays to have a professional in your corner. If you're facing IRS penalties, reducing or removing them is one of the very first moves you should make. It can knock hundreds or even thousands of dollars off of your bill and stop the bleeding. But I'll be straight with you. Dealing with the IRS on your own can be slow and frustrating. The wait times are long, the forms have to be exactly right, and one small mistake can cost you the whole request. That's where we come in. Here at Alleviate Tax, our CPAs, enrolled agents, and tax attorneys have helped thousands of clients save millions of dollars in tax debt. We know how to file for penalty relief the right way, and then set you up with a payment plan, a settlement, or an offer in compromise to get you back on your feet. So don't wait for the balance to grow. Call us today at this number or head over to alleviatetax.com for a free consultation. And even if you decide to handle this on your own, I genuinely hope this video helped you out get a little more control. Take care of it right now and give yourself one less thing to worry about. Thank you so much for watching. I'll see you in the next one.